Well, good afternoon, everybody. I hope everybody can hear me okay. And welcome to this webinar on ESG and corporate governance, the evolving role of audit committee. My name is Olivier Boutelis. I'm the Chief Executive of Accountancy Europe, and it's a great pleasure actually to welcome you on this webinar. Accountancy Europe has been working for a long time on corporate governance, and I still remember this initial paper that I had the pleasure of handing over to Salah in the Commission when the Commission was starting to reflect on the role of corporate governance in the field of sustainability. And while today we're obviously going to focus on what the European Commission is doing with its proposal on sustainable due diligence, I think it would be great if we could also slightly enlarge the debate and look at how this whole discussion is going to impact the way we actually govern companies and the way we do business, because I believe Salah will tell us very soon that at the end of the day, this is what needs to change. This is what we want to change, the way we do business. So to join me in this conversation today, I'm delighted to welcome what I think is normally called a distinguished group of speakers. We have with us Salah Sastemonian. I just spoke about you, Salah. You're the Director in DG Just at the European Commission, who's actually in charge of the Sustainability Due Diligence Directive. We also have with us Maud Gaudry, who is the Global Head of Sustainability at Mazars, the very well-known accountancy firm. And we're also joined by Josina Kamerling, who is Head of Regulatory Outreach for Europe, Middle East and Africa at the CFO Institute, as well as by Turid Elisabeth Solfgang, who is founder and chief executive at Future Board. So with that group of panelists, I think we can have a broad perspective on what makes actually the fabric of corporate governance. But before entering the discussion, Salah, can I ask you to set the scene for us? And maybe not so much brief us on the Sustainability Due Diligence Directive, because I'm sure everybody in the audience knows it almost by heart as you do. But just to tell us how you think it is important, how you think it is going to be implemented, what is the future prospect of your proposal in other terms? Salah, the floor is yours.
Thank you, Olivier. And thank you to the Accountancy Europe for this the kind invitation, for this opportunity to participate in the panel discussion, to get to hear the views of the accountancy profession, investors, board members, policymakers and to contribute as a policymaker. So it is all of us who are important for the due diligence under the directive and the future directive as we are bringing it forwards. As I indeed come from the DG Justice and Consumers, I'll first briefly talk about the Commission proposal. I don't go to the details there. I'm very happy to hear that you think also that there's a knowledge about the directive, but I will touch some features that I find are useful as an introduction to our panel, so that we are then further focusing on the role of the audit committees, on the role of the boards, of how the companies will adopt a comprehensive approach to the sustainability as it has been announced as a theme for the panel. So our proposal is now a couple of months ago from February. And it was quite a complex preparatory process. It took time from the Commission to come out with it. But we are now quite confident that the legislators will be successful in the negotiations. So it is the French presidency in the Council which has started the negotiations. In the Parliament, it has taken a bit longer to set the mechanism, I can share with you that there were 12 parliamentary committees who were interested in contributing, and the Parliament will make the decisions only in September. But both are ready. Both legislators are ready to negotiate, so that by the end of this mandate we would have a directive if everything goes well. So why we should have it then? So we want to shift the sustainability matters to the strategic level in the decision making. So we want to integrate it into all corporate policies and actions, and that way expand the company's horizon beyond their boundaries. We are proposing to cover value chains. And all this is then bringing in and contributing to the sustainability transition of our economy. So one of these current transitions that are going on, sustainability, digitalization, upskilling transition. So we focus here on the sustainability. The proposal aims to underpin that process by setting behavioral obligations, so those substantive obligations. And this is then in addition to the other proposal, namely the Corporate Sustainability Reporting Directive, which covers the reporting obligations. I would like to point out three aspects of this due diligence obligation. So the due diligence, I think that process is familiar. You are familiar with that one in the audience. So it is to identify and take appropriate measures to prevent and bring to the end any actual and potential negative human rights and environmental impacts. And for that purpose, the companies should adopt a due diligence policy and integrate this kind of impact mitigation to all corporate policies. But these three aspects. First, the due diligence extends beyond indeed the company, so boundaries of a company as an individual legal entity. Because it covers the adverse impacts arising of other parts of the value chains. So it is the established suppliers and beyond tier 1, the use of products and their disposal, as well as arising the impact impacts arising from the subsidiaries. Second, I recall that these proposed due diligence requirements are existing ones, in the sense that the directive is based on the existing UN and OECD frameworks. So they have set up voluntary systems, and where we now go further, it is that it is a mandatory instrument. So it will be legally enforceable by public authorities, also by civil liability. For that, from that perspective, we have proposed to make the scope and the content proportionate and feasible, in that way balanced when we go forward, as it is something new to bring a mandatory instrument in the due diligence in a horizontal matter here. And the third point is that the sustainability as understood under this directive, it covers the human rights and environmental adverse impacts. And these are under something where we have taken the international obligations as a, let's say, standard. It's the international obligations that are listed in the annex of proposal. So such agreements which are signed and ratified with a significant number of the countries, EU countries and countries globally. I also remark here that the list does not include Paris Agreement, so that way the climate issues are not under the due diligence process as such. However, the largest companies will need to adopt a transition plan to ensure that their business model and strategy are also compatible with limiting the global warming to the 1.5 Celsius degree. So this is then important part also on the sustainability, but climate issues are not under the full due diligence. I will still mention then the second main area, what is harmonized by the proposal, and namely the director's duties. So one thing is that these are closely related to this implementation of the corporate due diligence obligations. because the directors have specifically a responsibility to put in place and oversee the due diligence policy and actions. And in this context, it's directors who have to make sure that the stakeholders and civil society organizations are consulted. Furthermore, the directors would be then obliged to take steps to adapt the corporate strategy and to take into account adverse impacts and need to prevent or reduce them. So this is specifically focusing duties focusing to the due diligence process in the companies. On the other hand, we are also proposing more general duty to the directors. So this general duty would be to act in the interest of the company in a way that it recognizes the sustainability matters and that these sustainability matters can affect to the long-term performance and value creation of a company. So the directors would need to take into account the human rights, environmental, and also climate change consequences in their decisions, including short, medium, and long run. So this is something that I would bring here as a background. As I said, we are now in the negotiations that are going on. The council started. The Czech presidency has said that they are taking the negotiations forward, and we are waiting then from the European Parliament to find out their system and rapporteurs. As such, European Parliament was very supportive, and actually is one of the demanders, or somebody who has demanded this legislation at the European level. So here to start and give a background.
Thank you very much for these briefings. So very interested, later on to get your views on how you see this developing. But maybe I'd like to start the conversation with colleagues, and I think we want to have, views on these proposals, but again, also on how the board is evolving, how its role is evolving, and how its different committees are going to contribute to making this role evolve. And what the best starting point is there than asking, investors and their advisors what they think about all this, not necessarily on the premise that shareholders actually own the company, because I don't think they hold, they own anything else than shares and not the company, but how they see this evolution actually of business and corporate governance. Josina, can I throw you the ball?
Yes, you can. And thank you very much, Olivier, for inviting me to come and speak in this very interesting panel. But first of all, thank you to Sala, because you gave in a nutshell, you really gave the sort of importance of this piece of legislation. It's an incredibly complicated piece of legislation because corporate governance is so highly sensitive and so national. And this has been, of course, a very problematic thing. I come from an investor perspective, which is global. And so the more horizontal issues you create on corporate governance and transparency, the better it is for investors. I'm going to take you all a little bit into the changing perspective of investors. And then later on, Olivier, in the conversation, I'll address the changing role of the audit committee. But let me start with that very interesting review that came out of the UK Dasgupta review, which highlighted the fact that nature is a blind spot in economics and that we can no longer afford for it to be absent from accounting systems. And again, we can also no longer ignore the way it pervades through the whole economic system. That, I think, was a very interesting phrase to use. And again, when I look at our members, our CFA members who are mostly on the buy side throughout the globe, we have 200,000 members globally, then you would see that the perspective of looking and analyzing information has changed because of these kind of statements that have come out of global policy making. We did a survey back in 2021 in middle of COVID, really to put our fingers on the pulse of where investors were. And what came out was interesting. This was at the start of COVID, but already you could see the changing issues. Most of our respondents were agreeing that forward-looking information was really the most important aspect to focus on and assess the impact of any crisis on companies' anticipated financial results. And again, most of them also thought that the priority would be to disclose that impact on estimates, goodwill, loan, intangibles. So you can start to see the sort of forward-looking part that was becoming so essential to investors. This really is a part that for me was very interesting, because I remember several years ago when I would go and speak to commissioners and their cabinets and think and tell them, well, investors are thinking this. They would say, yes, Josina, but what you're thinking is blue sky thinking. What you want out of capital markets is blue sky thinking. Okay, we are in a world that needs blue sky thinking. And I think the Commission took upon itself with this piece of legislation to think forward. And I think that is, for me, the most important point, is this forward-looking drive that we are in. Never have I had so many regulators saying to me, I want to think forward. We don't talk about the past. We want to think forward. And I think this is a challenge for companies. This is a challenge for audit committees, for auditors, accountants, for directors, because companies are in this move too, to look to the future. The sentiment survey by the Edelman Trust, which it does a global survey on a yearly basis of consumers, professionals, etc., looking at markets, they already in 2021 also said that the shift has gone to looking much more to companies and how they are evolving in their natural sphere, and to look at to them to change the dynamics of society than to governments. So again, this is interesting. These were retail and consumers saying that they are looking at companies. So that again gives you a perspective that regulators are realizing that they're moving pieces which weren't moving so much before, and that responsibilities have shifted. And I think again, this is very important to us in our discussion. And if you allow me, Olivier, I will say a couple of tiny points, and then I'll give the floor to someone else. But again,
thank you.
What really is important is this transparency issue and this connectivity on data, but understanding the right data. And that, again, that is where audit committees, where accountants, boards, companies play a very, very big role. Thank you.
Well, thank you very much for ending on that note, Josina. You're making my job a lot easier, because what is the best link between the expectations, the changing expectations, as you very well described, of investors and the role of audit committee and accountants? So I think that's a perfect transition, yet another transition, to give the floor to Maud and hear the views from your experience at Mazars and how you see this evolution in the role of audit committees and the accountancy profession. And then we'll get the views of the board and we'll start the real discussion. Maud, the floor is yours, please.
Thank you, Olivier. Hi, everyone. When you say, accountants and auditors, the immediate next word that comes to everyone's mind is compliance. And I think this is, if I had to only, use one sentence to summarize what we see as auditors, is that what Salah and Josina described is everything but compliance. Compliance is not the point here. The point is, and you said it very clearly, we have to change the way we do business, right? Yes, there is a need for transparency, but there's a need for transparency about new behavior encompassing and embracing new categories of risks and opportunities as well, right? So and it goes way beyond what we're used to when we talk about financial reporting, where you basically report on what you control, right? But that's the thing. I think the whole momentum that's being driven by the European Commission is about the fact that if you depend on your ecosystem to be sustainability profitable and value creating, then you are responsible for what happens, outside of your scope of control. That makes you the positive actor you are, or if you're not, then you need to take responsibility and act on the potential negative impacts your operations have on that ecosystem. And I think that is probably what is the most difficult part to grasp in everything that's going on. We're not talking about a new series of text that you read and then you implement, because it's really pulling on a different way of looking at the way we're doing business, why we're doing business. And by the way, all of this is happening on a number of different issues that are very technical ones when you talk about environment, and that are very sensitive ones and culturally different ones when you talk about human rights or social and governance impacts, right? So we're not talking about math here, right? And all of this has to happen in a very short period of time. I think what we see, and I've heard that in a number of audit committees, some of the board members say, and this is how we feel it in the accountancy profession as well, this is a revolution similar to the, moving to national GAAP, to the IFRS in financial reporting, except it's not one standard by one standard, it's a number of them at once on a very short period of time. And we're not leveraging on practices and behaviors and good practices that are already mastered by everyone. We're all learning as we walk. So it's a lot of new responsibilities for board members to address and to act on in a very fast evolving environment, talking about things that a lot of them are not yet completely comfortable with, because it's actually calling on new skills, new ways of looking at risks and how you actually identify, monitor, mitigate, remediate those risks. So everyone has to learn super quickly as we go, because clock is ticking, right? We can't say we can take 10 more years to do that. So from a very practical perspective, it has both the accounting profession racing against the clock in terms of acquiring the new skills and competencies to accompany the implementation of those new rules. I think everyone agrees that this is the right direction of travel. I think the reasons for sometimes discomfort or people questioning, what we're doing is not the goal, it's the speed, right? I can't remember whether that was you, Salah, or Jessina, saying it's about feasibility, but that's the point, right? We have so many things to learn in a very short period of time that the feasibility has something to do with the speed at which we go. And in a very short period of time, audit committees will have to really play a very pivotal, and we see that happening already, very pivotal role to really steer the entire board's rise to sustainability. And here again, not at all in a compliance perspective, but in a way that the board and the entire company will consider strategic orientations in terms of how sustainability impacts, whether they're positive or negative, are being considered and acted upon, right? And that in turn actually requires from board members an incredible amount of time to be committed on those aspects. Also upbringing a number of new competences internally and externally. And also none of this can happen without very significant resources being put on the table to support the board's work on those topics.
The very long list of challenges mode. Thank you very much. So we've heard from the expectations of investors. We've heard about the initiatives of policymakers. We've heard about the challenges are very well actually framed that the accounting profession can see in making this work. Now, there is someone who's on the receiving end of all that, and I'm very curious to hear what how boards are thinking about this. Victor, can I give you the floor and tell us how you react to what has been said so far, Turid, and how you see it being put in practice in the boardroom?
Thank you, Oliver, and it's a real pleasure to be here. Thanks to Accountancy Europe for inviting me to share my reflections on the implications of the ESG agenda and the related regulations from the board's perspective. And you said you remember the first draft you sent, Olivier, on this topic. I can remember when the non-financial reporting directive was presented. And I guess they have some kind of the same reactions now as we did then. So while the spirit is not always the letters of the CSRD and the CSDD are largely being embraced by the board directors, the escalating numbers of new regulations and legislations are worrying those inhabiting the world of boards. However, if boards don't listen and act, regulators will do what regulators normally do. They regulate. And as I see it, the implication of this new board order is first and foremost that a fundamental mind shift has to take place in the boardroom. From the shareholder focus to the stakeholder focus, from the silo reporting to the integrated thinking, and of course from the short-term capitalism to the long-term value creation. And we know that many board directors have already started this journey, although too many still have a long road ahead. And secondly, and equally important, is how the board should reorganize its work processes. And already in 2016, my good friend, and in my opinion, the rock star of corporate governance, Professor Mervyn King, he published the book, The Chief Value Officer. The accountant can save the planet, no less, and a tall order. And I guess we have many accountants listening here, so you are going to save the planet. And Mervyn King argues, amongst others, that while financial statements are critical, the sustainability report is meaningless without numbers. So here we are, 7 years later, and one step closer to placing the accountant front and center of ensuring not only compliance, but rather commitment to ensure the company creates a long-term value for all. So as ESG requirements are moving from mere storytelling to hard numbers, it seems relevant to place the task with the audit committee. But still, and according to a recent article in the Harvard Law Forum on Corporate Governance, the majority of companies have a mix of full board and committee oversight. And this mix may consist of existing committees retaining continued responsibility for matters that already fall within their mandate, or being delegated primary oversight of specific topics, with a full board retaining primary responsibility for other areas. Whichever route that is chosen, it is critical that the different board committees are acknowledged as preparatory bodies, that's a difficult pronunciation in English, preparatory bodies, and that the collective board is on board on these new realities. And that brings me to the third aspect of the ESG agenda and the tsunami of ESG related regulations and requirements, and that is board competence and the composition. A recent survey conducted about board members of the 75 largest listed companies in Norway, Sweden, and Denmark shows that the boards lack the necessary knowledge and experience related to sustainability. And this is in line with the result of a survey among European board members conducted by Mazars, which shows that although sustainability is high on the agenda of top managers and the board, they are struggling to integrate sustainability thinking into the overall strategy. So to me, it is evident that in addition to the required mind shift, board directors need to develop their competence in line with new expectations from regulators and the investors, as well as the wider group of stakeholders. Board directors should not be expected to be ESG experts, but they need to know enough to ask the right and the critical questions, and they need to know enough to ensure they get the right answers. And while existing board members are updating their skills, we must ensure that new board recruits with diverse perspectives and different views of the company's role in society are taking their place around the boardroom table. And whether they are male or female, young or experienced, from different backgrounds, cultures, and experience, we need people with competence, curiosity, and courage to move this agenda forward. So thank you for this first intervention.
And now starts the real discussion, Turid. Get ready. Very interested actually to hear all of you talk about skills, competencies, mindset, culture. I'm not always sure myself what all these words actually mean, although I think on the front of skills and competencies, there are now enough studies to see that this is missing and badly missing, okay? But I would have expected to hear the word purpose a bit more. I mean, is what is changing in reality is the purpose of business, the purpose of investors, the purpose of the accountancy profession. And Salah, don't worry, you will have your share as well. Maybe the purpose of policy making and how you're going to ensure coherence between the different policies that the Commission, for instance, is developing. Are you confident, Salah, that what you are doing in DG Just is consistent with what your colleagues in FISMA, Taxud, Development, Growth, are also doing? I mean, from your four perspectives, what do you think about purpose and coherence? Is there something that we should also look at here? Josina, if I use the word purpose, I have the impression you're going to jump on the mic.
Yes, well, I'm going to use another quote. I do like starting with quotes because it focuses the mind. The Salzburg Corporate Governance Forum has produced quite a few interesting exchanges, and one man, Ravi Chaudhry, said it is time to change the narrative from corporate governance to governance of the corporation, beyond corporate compliance to corporate character. Character is the main element there. Beyond making money to how money is made. Beyond corporate lobbying to corporate acknowledgement that society matters and nature matters more than all the global corporations put together. Now, this may sound like la la land, right? But to me, the word character and this fact that we go beyond what is the immediate short term of making money to that ultimate purpose that we evolve in a finite world. And some of the calculations show that, the way we are living, actually, we need 1.6 worlds to cope with the way we're living. So we just cannot do it anymore. And we still don't stand still. I mean, Turid, I loved, some of the points you brought forward on boards and how they need to change. But is that enough? And Salah, you were ambitious with this piece of legislation, but was it enough? Are we making those moves? And Maud, you speak about the challenges facing auditors, but we still feel, and investors see these perspectives, is that it all seems still very disjointed. Do we have that common purpose? And Olivier, I know you're the moderator, but I know you do also have.
Oh, I've seen you've taken over already.
I would love to get your take on this as well, because I think that common purpose, acknowledging the finite world, acknowledging that beyond making money, we actually have to do something else, is supremely important. Boards need to keep that in their mindset. What I quoted to you from the Edelman Trust is important. There's a new responsibility. Do boards see that they have this new, let's say, democratic responsibility? It's a tough one. And is this what companies really need? Or are we just changing everything and saying, oh, right, companies, this is what you have to do? And it's complicated. So at CFA Institute, when we when you look at our corporate governance manual, you see that one of the first things we talk about is ethics. And when we look at boards, when we look at companies, the whole stream of the company from the junior manager to the top, to the different committees, you need to think about the ethics committee as being one of the central linchpins, because in this new world where so many challenges are facing, business conduct and ethics is going to be at the basis. There needs to be this trust, and that's where I come from. We do our yearly trust surveys. Do we trust? Does that trust enable us to take the leap, to invest differently, to trust the company to give us the right information?
Good. So now that you took over the moderation, Josina, don't worry, we will still have a challenge for you, because I think it's interesting. You're flowing, the ball back to the board members and the accountants. But the next question that will come to you might be whether, and to what extent your members are prepared to change their focus as well, and not look at profit as the main, objective of investment. But I'd just like to go back to you, Maud, for a second, because it's interesting. You were talking about this change of the magnitude of having to change to national gaps to IFRS. Seems to me we're talking about moving from the Stone Age to the post-industrial age right now. So quite a big leap forward. And I see, for instance, in the chat, a question raised by someone I know well, actually, who's asking in terms of culture, do you think that accountants who have been basically educated and who have been used to focusing on the rear view window, looking backwards at things, will now be able to look forward throughout the windscreen? That's a nice way of putting it. How do you see the cultural challenges within the profession, Maud?
Well, I like the comparison with looking through the windshield and not backward. I mean, first, this is the way the world is going, right? So unless the profession wants to be completely outdated and irrelevant, then we will have to change. It is very true that when you talk about forward-looking information to an auditor, suddenly his or her heartbeat just, raises through the roof. But joke being set aside, it will really depend, on the level to which we have to base our opinion. But we're just talking about rules, right? So the role and the purpose of, back to your question, the purpose of the profession will be to contribute to defining those rules that will make providing transparency and forward-looking information secure and trustworthy for everyone. I can see no reason why we can't do that. It's a question of agreeing about what it is we assure and what it is we are not providing an opinion about. And another very important driving factor for the industry is the fact that the younger generations are not interested in financial audit anymore, right? All they want to do and hear about is about sustainability reporting, because they're driven by purpose. And when we're having discussions, hiring discussions with the younger generation, like they basically send this, observation back to us, like, guys, you have to stop looking at what's happened in the past. You need to look at what's going to happen in the future. So the key driving force of our entire profession is looking in that direction. I cannot see how the entire profession could resist this wave of a new culture that's being driven by the new blood that will make the profession in the next few years, even if it's in our DNA to kind of resist that new way of looking at things. I'm very optimistic, otherwise I wouldn't be doing what I'm doing, that the profession will at a global scale manage to take that really important turning point. I think it's always a question of being transparent on what kind of rules we will set for ourselves, and what it is we will provide comfort and assurance on when we talk about forward looking. But that's the way the world is going, so we will definitely I think be there.
So if I hear you well, it is not about protecting shareholders anymore, it's about protecting the planet.
It's definitely this. There's it's I mean, come on, like every day we have good reasons to embrace the fact that the world as we've known it doesn't exist anymore, right? You can play the ostrich and duck your hand in the sand and pretend that you can apply the same recipe and everything will be fine. We all see it doesn't work. And we also, I mean, I don't want to come into technical debates, but on the reporting standards, since it's an important aspect, and what's going on with the proposals from the ISSB, in terms of sustainability reporting, they claim that they're really looking forward to having standards that will drive information that will be relevant for investors. But when you look into what they are currently proposing, it's no different from the double materiality used in Europe, in which impact is equally important as financial performance and health. So even those people who claim that the most important thing is information valuable for investors somehow recognize that at the end of the day, it's not just euro or dollars that count, but the health of the wider ecosystem, and that's what everyone should be gearing towards.
But isn't that also the fact that we're so late on this ball after more than 50 years almost of warnings from science that we're going in the wrong direction and continuing our acceleration in this wrong direction? But at the end of the day, double materiality, yeah, that's interesting, but it starts having an impact on financial materiality as well.
Exactly. There's no
only
such
one
thing.
word. Okay.
Yeah. There's no such thing as on one side financial materiality and impacts on the other side. They breathe together, right?
One and the same world. There is not a physical planet on one side and a financial planet on the other side. So how do boards deal with that? And we talked about purpose. So we see now that we will challenge the investors on what their purpose really is. We've heard that the accountants have radically transformed their purpose from ensuring integrity and transparency, from protecting shareholders to saving the world, basically. What about business? What's your new purpose? How do you see that? And not only talking from your perspective, but talking from the perspective of, I'm afraid, the majority of business who are not yet on this agenda.
I think one of the problems or the challenges in the boardroom is that we must remember that board directors are mainly chosen because of their long experience. That means they are also of high age. So, and that doesn't mean they don't have fresh minds, because they at least they can have that. But maybe the long experience from perhaps businesses that no longer exist is not so important anymore. And that's perhaps the huge shift in the boardroom. We have to bring in new thoughts. This is a whole new world in the boardroom. And somebody says that the boardroom should not be a comfortable place. And I think it's getting more and more uncomfortable to be in the boardroom. And also that all these new regulations and legislations are coming in, and board of directors, many of them are quite confused now. So what is this, what is that? And they perhaps would put it to the management and say, well, perhaps you can fix this. And they don't actually keep up with all the new regulations. And of course, reading the CSDD directive takes a while, and just to read it and to understand it, it's a longer road to walk. So I think actually, and also if you ask in the boardroom what is the purpose of the company they're surveying, you will get usually different answers from those board members. And also if you ask them what is the purpose of you being on this board, that will also be usually different. And that places, I guess, the responsibility on the investors, because the investors are nominating and electing the board members. And to secure the next mandate, board members must ensure that they are in line with the expectations from the investor, first and foremost. So, yeah, I don't know.
It's very good you helped me. It's very good you helped me bring back the investors, on the front scene here, because we're now going to ask Josina, what it is that investors want to do if profit is not their main purpose anymore. So what about the role, after having challenged everybody, Josina, tell us about the new role of investors. And Salah, we'll give you the floor to react to what we've heard after that. Josina.
Okay. Thank you for that question. And I will come in on Turid, where she mentioned, the sort of board composition with their long careers, and that we probably need more challenges. And I would say, well, the same thing is faced with investors, institutional investors and asset management companies. If everybody thinks the same way, they're not going to go beyond the typical investment strategy. And this is why we've been doing research into what is the future of an investment management company, what is the future of investment analysts in this whole new process. And what you see there is, again, this absolute need for a portfolio approach, which is looking at all the angles rather than just in one way. And I think part of the problem that we're starting to see erupt in the different articles in major newspapers like the FT is when you hear that, it's still lip service, ESG is still not part of the DNA. There are many problems. There's greenwashing. You see the Dutch regulator come out with quite a stringent report on greenwashing. AMF in France has also mentioned this. And we realized that, the focus was on asset managers proving they had Article 8 or 9 funds, which became the buzzword. Not looking really at the essence of what it is to invest sustainability and maybe to give up some yield in favor of this longer term perspective. But there you get into trouble because there's a difference in terms of what we say, and I will show you some gaps in terms of investor expectations between the retail investor and the institutional investor. So the institutional investor, what he thinks and wants the most is very forthright disclosure of management of conflicts of interests, and again, making sure that there's a similar generation of better return than the target benchmark. But the top really is that forthright disclosure. So on the retail, what is really important is the actual structure of the fees and understanding what it is they're being hit with. And I think that, you know, we still haven't got our heads around. If you look at some of the challenges that retail investors are seeing in whether how to invest in products and not getting the right information, we realize that first we have to go through the whole chain. And this is to the point that I think the ESMA and the EU Commission have really got, is that we have to get that investor education sophistication in understanding what they're investing, because otherwise greenwashing is going to be rampant. And this is not going to be a help. If we know also that the largest investors have a multitude of companies, they're not going to engage with the company and ask all the different companies. They're going to have a spreadsheet and tick off. So you get to problems. You know, how does the company react to that? When Turit, you told me that you expect investors to push and stimulate the board to take those decisions, but if the investor is being faced with, you know, the cost cutting, the charges at the retail, like the institutional level, it's much more about sort of that benchmark and thing. How do we manage that whole flow? Well, I don't think we have an answer for you. I mean, I wish I had an answer for you, Olivier, but I don't. I think the awareness is important. And I think what is also interesting is what is happening, for example, with disclosures with the UK review, which is starting to take a slightly different approach from the Commission. So I think this is something that we're all treading together, but it's not an easy one because you have all these different moving parts with different expectations.
Yeah. And we still have a lot of questions that, you know, we don't yet have the answer, but you can count on me, Josina. I'll come back to you with the same question on and on again in the coming years. Salah, I think you've heard your stakeholders basically debate around the changing role of business, the changing role of corporate governance. Now, when you take stock of this discussion and look back at your proposal, how optimistic are you on the future of the proposal, or even do you regret and think that you should have been more ambitious? What do you think?
No, thank you, and thanks for the good discussion. When we started about this discussion, it was also about this purpose and coherence. And actually that comes then a little bit, that comes then to this question that should have it be more ambitious and so on. Well, because what I'm telling you that as regards the coherence, naturally the Commission proposals are coming from the college, meaning that it is the whole Commission, all the various Directorate General services participating. For example, the due diligence proposal is a joint proposal with DG Grow, so with the internal market and industry. And when we prepared it, I think that we had 16 or 17 DGs involved. So all over, from FISMA to environment, from external relations, because we are also, I mean, we are actually talking about the value chains which go outside of EU too. So that way the coherence comes from this exercise. But why it is indeed, you are very right of stressing the coherence, because when we think about the purpose, this purpose of the sustainability, that doesn't come as a surprise. I mean, in the globally, the UN, United Nations, all the, let's say, which covers almost all the countries of the world, has committed to the sustainable development goals. And there's a system to monitor that in the international level. So when the EU is working to promote the sustainability, it takes that global framework into account, and then the planetary borders. So the physical world, where we see, where the science has shown us that we have to look the environment, the climate, and then our values, human rights. And all that is then put together in the Commission's policy guidelines. So we have the Green Deal, we have the values that are there behind. And naturally, when then every DG, every commissioner is aiming for the same purpose, it brings a lot of different policy measures, a lot of different acts. As regulators, we are indeed then proposing legislative initiatives, and that's also you have the right questions there. That is there coherence? So my reply was that yes, we naturally will look at it, but it is also true that one has to then read it so proposal by proposal. And when we think about the links on the due diligence around due diligence, we do have the taxonomy, we have the sustainable reporting directive that was mentioned, we have the deforestation proposal, we have a lot of proposals around. We are working on the proposal to stop forced labor or products made of forced labor to enter to the EU. So that then in details it is found in the pieces of legislation. And my example from the due diligence proposal is that, for example, this is a horizontal. That applies when the others do not apply. So if there is any more specific legislation in a certain sector or area, that has the precedence. So that has the precedence. But it is indeed we understand that politically or bringing quite much at the same time. It is the challenge for the companies. And that way, all those who are involved, whether it is in those who invest to the companies, for example, investors, naturally, that's one part. I mention the taxonomy, which is supposed to give more information on the investors on what type of what are those investment objects that are considered sustainable in the general matters, or then in the company boards. So how we are working also on that one is that we are foreseeing in the proposal also a lot of Commission guidance. So the work is not finished by the directive, but we will then work with the various guiding measures. But what we are very thankful is that we are not alone. Like this event today shows that there are many actors, many stakeholders. I mean, as it was mentioned, we are going to the stakeholders also to work on these issues. Something that came from the discussion, I think indeed it was the importance of this strategic vision and how that is needed, and on reaching the strategic level, meaning the board members. So you had mentioned, Josipa mentioned some various studies. I'm mentioning very recent study from the Eurocommerce, which was looking at actually the retail and wholesale, the whole their area, which is an area where which is a challenging, because they are bringing together, if one takes the food and drink sector, really a lot of different type of the products, and how to look that in the value chain. Well, they were looking at these transitions, including sustainability transition, and they came out that how will we what is really decisive, how we will succeed in this, is that the strategic level CEOs are involved. So this was indeed one of the reasons that it's not left in the let's say only in the lower level in the companies. That's why we have these duties also to the board members included, because there was a lot of discussion that should one touch that one, should one only do the due diligence process and then leave it. But that we believe that wouldn't be then the successful model. It is good that we are also saying this in the directive, that what is needed is actually the involvement, and that it is not only needed, that it is a duty. So that way, when it is a duty, I think that is something indeed what is then a little bit was what Turit has been discussing, that it is the board member. You had then also a bit concerned that if this kind of is a duty, do we have board members who are ready to take this duty? We are. I think that we are quite trustful in the future that yes, there are also, and that also the existing ones are able to, they are learning and they are looking within the society. So indeed, it doesn't have to be the board member and who is the expert. That's not the one. The board members are not experts in every area, but it is this strategy. It is this setting that vision, and then you have those who execute. So, and who are then experts there in the execution. So I find that is important to repeat. It was said already here that the board members, they have the responsibility, but they don't need to be the specific experts in the ESG. It is more this thinking. And maybe
they're not. Yeah, sorry.
Yeah, maybe
Please
maybe
finish your point. Yes.
Yeah, maybe to finish on this came already very early. It's a small point, but it came very early with the Maud mentioning it. Naturally, this is kind of the change in behavior. It is not only a compliance. But I want to make a small point there, because I think there are people who are listening in the audit committees or those who are doing a compliance. There are some compliance points in the proposal, in the smaller ones. For example, when the proposal is requiring the verification of the compliance on these contractual clauses in the cascading. So it is when we have, it gives the possibility to have contracts of looking, and that way influencing to the value change. And there we are mentioning that this kind of cascading could be subject to the independent third-party verification, also by industry initiatives. So there are some aspects there, and that way the auditing, the, let's say, environmental and human rights audits, it plays a role here, and that way we are influencing indeed not only to the board members, but actually to those who are then who are to the auditors who can look at it. That are they verifying these companies' business partners? So the proposal has various impacts.
So it is compliance with a purpose, as I understand you, not compliance for the sake of compliance. And that means that maybe one of the questions is going to be how we organize the board to do that. So you mentioned, Sala, that maybe some board members lose appetite to be board members. Well, there is a new generation out there that everybody has been talking about that may be ready to step in their shoes. So, okay. But in terms of organizing the board, there's an interesting comment in the questions on whether everything should fall on the audit committee, how it's going to interact with other committees, whether we need a special purpose sustainability committee, yet one more committee in the board. And I think you mentioned the magic words to read integrated thinking. I knew we had more than one Mervyn King in the world, but I didn't know one was a rock star, actually. So I'm learning things today. But how do you think we can organize, the board in this context? And where do you lean? Do you see an over-powerful audit committee looking at all that? Do you see a sustainability committee? Do you see an integrating committee? What's your view? Tell me.
Well, as I refer to the Harvard Law on the Forum on Corporate Governance, that there are a mix here. In my view, the whole board should be on board. Of course, we can have committees prepare for the different topics, but we must ensure that the whole board knows what's going on and also have, as you mentioned, the same purpose. And that's what it all boils down to. So when we see companies, they have ESG committees, they have governance committees, they have sustainability committees, and they place something on the audit committees. So it's really a mix out there. So while board work used to be, very traditional, very streamlined, we had the audit committee, we had the compensation committee, and also the nomination committee, and that was it. And now there's a huge mix of committees, and as board members move from one board position to another board position, and also at the same time, of course, they will experience different ways of doing this. So, and I guess also that depends on the size of the company, the business of the company, what they're actually doing, and how they're doing that. So I guess every company, every board needs to find their own way of doing this, but always keeping in mind and having in the backbone, well, of course, where we're going, but why are we going? To me, that is the crucial point. And going back to this is not a compliance issue, it's a commitment issue.
So purpose and commitment, Ruud. So Maud, in your daily work, when you're not participating to great conversations like this one, I suppose you're mostly interacting with audit committees. What about the other committees of the board? What about the CFO? What about the CEO? I mean, how do you engage with them? How do you have these conversations around purpose, around you guys need to change your business model, otherwise we can draft a report, but you're not going to make the transition? What about these big picture issues that you mentioned very well actually earlier today?
It's a very good point. Thank you, Olivier. Actually, I think the people we talk the most to after the audit committee members are obviously the sustainability heads of department, right? Because they get it. But their challenge is to make their colleagues in other departments get it as well. In particular, and somehow that has changed thanks to the taxonomy, the finance department. It took the taxonomy because the information to be reported under the taxonomy fall under the responsibility of the finance department, and suddenly it kind of lit the bulb, and they realized that there's no such thing as someone is going to take care of sustainability information, behavior, blah blah blah, and I remain responsible of what I know is my control zone, right? So we spend really a lot of time talking to our finance department, CFOs, the board members in charge of this, and CEOs, because now everyone is realizing that since everything is intertwined and interconnected, when you move one piece, on one side on sustainability, it has immediate consequences in terms of business, and that's the problem of the CEO who wants to understand. If I want to get a green light on my, environmental transition plan, then what it is that I need to be aware of, and what kind of steps do I need to take, including if I'm going to have to really change my, the whole service or product production chain. What are the technical solutions that I need to consider? So it's kind of going from one little stone to another, but really we're spending a good deal of time with CFOs, CEOs, and they're extremely important in the implementation of everything we discussed, the head of IT departments, because securing the data. Yeah. Securing the data, its quality, covering everything we need to cover throughout the value chain. Like, you can't achieve anything without IT department. Like, you can devise tons of nice looking things, you won't be able to actually deliver on this. So not only are we talking to very different departments throughout the organization, but more and more often we're talking to them together, which is quite new. Usually we tend to have interviews with them separately, but they've lately realized that, okay, wait, I need to hear firsthand what you're talking to my IT department, to my CFO, and there is this momentum of really collective discussion that's going on that I find very reassuring, because that's the only way all of this is going to work, right? It's really a transversal approach, and having separate discussions is not going to do the trick.
I can't agree more with you, actually, Maud, once again, but we need an integrated approach. We need to look at things in a systemic way. I mean, nature is built in a systemic way, and we, especially coming from Caucasian countries, right, tend to look at things in different little silos, and I think we now have plenty of evidence that it doesn't work. So, Turit, you've raised your virtual hand probably to add something to that, right?
Yeah. Just a quick comment on this discussion, because it reminds me of the time when we were discussing digitalization and digital competence on boards. And it started with board members saying, well, we do have an IT department that takes care of this. And that's where we started on sustainability. We have a sustainability department taking care of this. And now digitalization is integrated in the whole business model and what every company is doing. And that's where we are about to arrive on the sustainability topics. And you said integrated thinking. Yes, that's the key to all of this. And yes, Mervyn King, the rock star of corporate governance, I must say. And I would also say that he is the godfather of integrated thinking. So as you understand, I'm a huge fan of Mervyn King, and I would recommend all of you to read not just his book, but also the Corporate Governance Code of South Africa, which is actually based on the business role in society, and it's an apply and explain basis, and not a comply and explain basis.
We actually had Mervyn. He was not really our godfather, but we had Mervyn actually speak at the at an event where we launched our paper on corporate governance, the one that we sent to Salah, actually, right at the beginning of the term of his commission, by the way, if I remember well. So not really yesterday. Okay. Now, can I just come back 1 second to you, Maud, informed by what Turit has just said, and with your conversations with CFOs, CEOs, do you have sometimes a glimpse of panic in the eyes of CFOs saying, oh my God, how am I going to continue growing my company? And depending on your answer, be careful, because what you answer will have a big impact on the next question I will ask to Josina.
I'm sure Josina will handle that very well. Yes, we do get a lot of that, glimpse of panic in their eyes. Oftentimes, also because I was involved in the works of EFRAG, on the draft reporting standards. I get, you've all lost your minds, like all of you. You need to take a break, and you need to sleep or do something. What you're asking is really unreasonable. But beyond, that moment of exasperation, because oftentimes this is what we get, like, right, this is too much, too quickly, you're going too far. I think it will really not be the same situation whether you're talking about a big company that is already, providing digitized information, that has the system, using the same language, and given the scope of both the CSDDD and the CSRD, we're going to cover a lot of companies that are entirely new to that kind of reporting. And for them, it's really going to be a challenging exercise to get all of the systems and the information and the teams to do all of this. I think for the bigger ones, a lot of the answer and the success of all of this resides in crisp, to the point information, and not blah, 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 trying to tell a story with way too many words and kind of missing the actual points. So the future reporting standards and the fact that they will be, crisp, to the point, giving information that is going to be really useful and not nice to have, as much as possible, not too narrative, but more quantitative every time it's possible. will then make the implementation reasonably manageable. But a lot resides in what the final standards will actually be. And when you look at the ongoing public consultations, both from EFRAG, the ISSB, even the SEC proposed rule on climate-related disclosure, I think the main challenge, it's a challenge and it's a concern for everyone, including the accountancy profession, right? Because it's one thing to provide assurance on numbers. It's a different thing to provide assurance on something that is entirely narrative. At the moment, there's an awful lot of information that is narrative, right? And I think key success factor for all of this will be the ability of all of the standard setters to really rebalance the amount of quantitative versus qualitative information. Not saying it's an easy exercise, it's really difficult, but I'm really convinced that too much information that won't be well thought will actually kill the deal rather than improve it. So not everything is in our hands, but it's a contribution. I think it's important to use the public consultation period to really make that point. It will not serve the European Commission's objective to request too many data points in the wrong format.
Well, if we have an event on sustainability reporting, because that's something we're discussing right now in other circles, looking at these free simultaneous consultation, I think I'm going to quote you, Maud, on too much information kills information, and it's not about a long list of exhaustive data points, but a clear indicator that business is changing. That's what would matter to me, I would say. But it's really interesting to hear this comment that comes back all the time, especially in business, Turid, I'm sorry, but it's too much too quickly. We're being asked to do too much too quickly. I mean, if you listen to scientists, it seems rather too late and too little, rather than too much and too quickly, right? And I think the way it's very interesting to look at how we judge this too much too quickly, because we always judge from where we are, not from where we should be. And from where we are, very often a small little micro progress is already seen as terribly burdensome. But if we compare with where we should be in a very short time frame, like 5 years time, I mean, we're really not moving fast enough, no? So with this glimpse of panic that you see, or that maybe you provoke, Maud, in the eyes of CFOs and CEOs, how is that impacting you, Josina? And are your members and shareholders and investors, are they reflecting on their change purpose again? And that if companies do not grow, how do they change their investment strategy?
Yes, and I think, Maud, you hit the hammer on the head when you spoke about the sort of let's say the mountain of data, and we have a tendency to throw data and say, okay, the more data we throw at something, the more then it becomes explainable. I think investors need to get their heads around it. Reminds me of the long discussions we had on the prospectus directive, which was, these 2,000 more plus pages, which we all thought was the best thing we could do, and it's not. And as we realize that the younger generation of investors, and we have to face it, retail investors are, we cannot speak about one profile of retail investor. We could in the past, we sort of had this middle of the road retail investor. We cannot speak about that anymore. There's a big difference between a baby boomer investor and a Generation X investor, completely different. One looks at his phone and makes a very quick decision, almost like with an app, and almost like a game. We go to the gamification issue. The other one goes to his advisor, sorts through, thinks through, has an idea and puts that through. Very, very different, which makes it difficult for asset managers. We also see that the world is very much into passive investing. Is that really helping sustainability or not? Big question. Big question about that. Do we also, when we look at public and private markets, do we get the same type of information that enables the investor to invest in projects in new growth companies? We've seen a tendency, and CFA Institute has published quite a bit of research on that, on moving more into private markets and the consequences that has. Also, we want to stimulate the growth of SMEs. Are we putting too much on them to reflect all this information that they need and curate? You spoke a little bit about that sort of different, we have different purposes for big companies and small companies, and that makes it very, very difficult for my members. There's a world out there which is very diverse, and between all these different challenges. And I think the biggest challenge really is the different profile when we see this huge move to passive investing and to gamification, which is completely changed. Is that going to help the move to a more sustainable world? I'm not sure, because at the same time there is less reflection on the long-term hold. It's more about the game. We're also entering a world where inflation is playing a major role again. We're not used to this. I mean, for the last 20 years, we've lived without inflation. The man in the street has to refocus the way he looks at his future investments. And I think, again, pension funds are going to play a big role in this renewed focus on sustainability, because if pension funds don't communicate in the right way to their pension fund holders about why they're making certain investments and why that might not give the right sort of yield for the future, we're not going to achieve that sustainability. And I think to come back a little bit to Maud, what is really important, and we wrote quite a few responses to some of the reviews, to the Boardroom review in the UK, but also to some other reviews. And I think the issue of quality, audit quality, will then become incredibly important. We haven't really spoken about audit quality, but when we think about the challenges of all these new committees coming up in boards, that's a challenge for an auditor and an accountant to, get the right people, talk to the right people, and to pass that information, whether it's in the financial report or whether it's in the non-financial report, to pass that information so that investor that is trying to make sexy investments sees the right thing. And that puts me to a mind, and I will close my thoughts on that. I think, Olivier, the problem is we still see sustainability as a box. It's not. It's actually, it's everything. We have to be sustainable, point. Otherwise, we're just finite and it's at an end. And I think that hasn't filtered through all the different change.
I unfortunately agree with you, Josina, unsurprisingly, I suppose. But probably we just have too many lawyers, accountants, financiers, economists, and we need a few more geophysicists and psychotherapists, because I think at the end of the day, that's what we need to start moving out there, right? Anyway, I also note that all of you have registered for a new webinar that we need to organize with exactly the same panel, one on audit quality, another one on reporting standards. So you are a fantastic panel. Thank you very much. And as we now had a great conversation and we're nearing the end of this one, maybe I can spoil the party a little bit, because well, we today had a great discussions, but we very often have great discussions, and we're very good at that. We're very good at discussing. We're also very good at writing directives, at agreeing treaties, and defining great ambitious goals and making speeches around them. But when we look at the facts, okay, when we look at the facts, they don't look very good. They seem to refuse to comply with speeches and legislation, these facts. Terrible, right? And if we look at the past even 10 years, and despite the tremendous impact of COVID actually on, for instance, emissions, carbon emissions, we see that we continue increasing and accelerating our increase of emissions. So my simple question to you is what's wrong? You know, where is this disconnect? Are we at the beginning of bridging this disconnect? And in other terms, what is your wish? And that's going to be your concluding comment. So keep it short. Salah, Josina, I keep an eye on you. What is your wish, you know, for these next 2 years? What do you think we need to achieve? What, Sana, do you hope for your directive? Because you sounded very optimistic that it was going to be adopted within this mandate. So each of you tell me, how can we bridge this total disconnect between what we say, what we preach, what we agree on, and what we effectively do and continue going in the wrong direction? Salah, you've got the easy bit with legislation, so tell us.
Yes, thank you. Well, the wish is indeed that we will have fruitful negotiations, finding a union level compromise then indeed in these 2 years to have the directive adopted. So that is certainly on the top of the wish list. Just to mention that it still then takes time. There's a two years implementation time for the member states. So if we are looking now, we are talking about 4 or 5 years ahead, actually, when that will be then really binding, and then even further on the little in smaller companies and high risk sectors that are also then in the later in the scope. So if this is the wish, then I would wish that this time what is there, that actually the boards would pay attention of the expanding the expertise inside then in the companies, and when the new board members are chosen, that they have there also if it's investors who select them, they pay attention to this expanding the expertise. And that type of expertise that not on all the details, but that there is a thinking in the strategic level, and that is actually then that will bring into the building the capacity in the whole company, because if the leadership is there, they will pay attention that there's upskilling and then in the whole company, and that way we are transforming the corporate culture. So these are then the wishes for the next years.
Just small wishes. Thank you, Salah. I think it means that I forgot one seminar that I'm going to invite you to on the enforcement of your directive. I think that's another topic we're going to have to address. So, Josina, from an investor's perspective, what's on your wish list?
I think my wish would be for linking up from the top down to the top. And I think you have the grassroots, whether it's retail investors, employees in companies, general consumers, whatever, and then you have the top. You have regulators, investors, institutional investors, asset managers. You have boards, etc. And I think there needs to be a real concerted effort to join up throughout the whole process, because that's not really happening. If you read properly in the press, you see that there's still disassociation.
Thank you. I think I have a wish as well, actually. My wish is that mode creates even more of this glimpse of panic in the eyes of CFOs and CEOs. So I do count on you, Mode, okay? But what is your wish, Mode? Tell me.
I don't want to be a systematic source of panic for the people I interact with. I think my wish would really back to some of the questions that were asked by the audience, that our profession really rises up to the challenge to reinvent what we contribute to the wider society, and not just the traditional transparency and trust on financial information. I mean, we've said it in many different ways. We are talking about something a lot more challenging and urgent than that. Yes, it will push our buttons and it will push our profession really outside its comfort zone. But I think it's really a thrilling challenge to embrace. That's not just the future of the profession, that's also our modest contribution to raising more awareness on those really critical topics so that we do get our emissions down, because people feel concerned. It's not just a problem of somebody else, it's also my problem, and I can act in many different ways. It's a bit idealistic, not very much public accounting style, but that's my wish for today.
I'm going to contradict you one last time for today. I don't think this is idealistic. I'm afraid it's extremely realistic, because the truth is we don't have a choice.
Yeah, we don't.
As simple as that. So, Turid, I think you're last, representing the board on which so many duties, expectations, dreams are basically, offered to you. So, what's your wish on your side?
Thanks a lot, Oliver. Thanks to all of you for a lively discussion and very interesting and learning discussion. The purpose of future boards is to rethink corporate governance. And the last couple of years, I've been calling for a boardroom revolution. And I immediately got the question back, what do you mean by that? And I do mean that we must have the courage to take a completely fresh look at the role of the board, how they should work, and how they are composed. And we need to bring in fresh ideas, because we are working with a governance framework that has been for many, many years. And it might not be that we are needing for the future. So my wish, the boardroom revolution, it's here today, and we just need to hop on board.
Well, thank you very much. I think the four of you have been an absolutely fantastic panel. For those of you in the audience, actually, who would like to put a little bit more flesh on the bones of this conversation, Accountancy Europe has actually published a paper on the role of audit committees in the field of environmental sustainability and governance reporting. We have a long list of debates to which I'm sure we will re-invite many, if not all, of our panelists today. So a big word of thank you. I have a last wish, actually, which is that this is, despite it was a very good event, the last event that we do through screens. And that next time we meet again, we will be in Accountancy Europe at ACE events, our events venue to discuss public policy issues, because I think there is so much we need to talk about. There is so much we need to transform, but I think it would be great to be able to do that face to face. So that's my last wish for today. I think we're 2 minutes late, so I would just like to thank everybody on the panel. Thank everybody in the audience. If we're live, we will have a lot more interaction and participation. And thank my colleagues for all the efforts they've put into making today's event possible. Thank you very much, everybody. Talk to you again soon. Goodbye.
Thank you a lot. Have a nice day.
Bye-bye.
Bye. Bye. Bye.
Bye. Thank you.